So over the past few weeks, something that I quite simply thought was impossible has transpired, where a hyper-growth stock, meaning a company that's doing triple-digit revenue growth year over year, year after year, is valued at 40% of its next year's sales. This company, Shift Technologies, ticker symbol SFT, has a $400 million market cap on it, yet they're set to do over $1 billion in sales next year. In today's day and age of the stock market, this is just simply unheard of, and quite simply, it's almost impossible. So in today's video, I'm going to be diving into what I think is the most undervalued stock in the entire stock market, and I'm going to be going through my own bullish thesis, but also giving some bearish points as to why maybe this stock isn't getting the respect it deserves. Now, I know as I'm making this video, Shift Technologies has quite a retail presence. I know a lot of retail investors are invested in Shift Technologies, and if that's you, if you're new or returning, feel free to hit that subscribe button. But I also want to hear from you. How many shares of Shift Technologies do you own? And do you own any call options or anything like that? But only share if you are comfortable doing so. Without further ado, let's just go ahead and jump into this. First, I want to give a brief description of what Shift Technologies does. Shift buys used cars, fixes them up, and then resells them. You can think of it kind of like the home flipping industry, but you're flipping vehicles and cars instead. Now, only about 1% of used car sales takes place online, but industry experts expect that to boom to 30 to 50% of the industry over the coming years. Now, I'm not even going to get into that in today's video because we have enough mind-boggling statistics to talk about already, but I just wanted to be upfront with you about that. It's not just this company that's set to grow, it's also the industry. The industry is just now evolving. It's a very young industry. So being in this industry, obviously their main competitor is Carvana, but they also compete with the likes of Vroom and CarLotz. But now that we have the company and industry background out of the way, let's start getting into why this is so undervalued. And first, I want to look at the valuation here. We can see in this spreadsheet that I made, Shift Technologies is by far the most undervalued player in the industry. Obviously, as I've already covered, the main competitor in the industry is Carvana. They have a $50.5 billion market cap on it, so several times that of Shift Technologies, and probably for good reason, and I'll get into that later in the video. But we can see next year in 2022, Carvana is expected to do about $16.5 billion in sales, which gives them a times forward sales ratio of basically 3.05. All this means is that their market cap is 3.05 times higher than that of their projected sales for next year. But when we go down the list, we can see that the rest of the industry and the competitors in the industry really aren't getting much respect. Vroom's current market cap is about half of what their 2022 sales are going to be, but even that doesn't even touch the disrespect Shift has been getting. Shift's market cap is only about 40% of what their 2022 sales are going to be. And the third competitor here, CarLotz, is probably the most respected outside of Carvana in this industry. Their market cap is about 75% of what their sales in 2022 are going to be. But we can see just based on this that Shift's valuation just doesn't make any sense at all, especially given how fast it's growing. But taking this valuation metric compared to Carvana's, we can see that you could very well argue Shift Technologies is 7.34 times undervalued or 734% undervalued. And I'll get into why this is actually reasonable because I believe Shift Technologies is going to be the only other dominant player in this industry when it's all said and done. And it all starts with the customer experience. If we look at Trustpilot, we can see that Shift gets a rating of 4.2 out of 5 stars, with 70% rating their experience as excellent and only 16% rating it bad. In comparison to Carvana, Carvana is only 3.1 stars out of 5, with only 51% rating it excellent and 26% rating their experience bad. Vroom, on the other hand, is just terrible. This is why I don't think Vroom is even going to compete in this space over the long term. 88% of the customer reviews rated that they had a bad experience with Vroom. In CarLotz, there's just not much data here, only 4 reviews, but they get 3.5 out of 5 stars. But they also are by far the smallest player right now in this industry. If we go back to my spreadsheet, we can see that CarLotz is only going to do about $500 million in revenue next year, which is very low compared to all these other names. So we can see that Shift takes the cake here. Shift by far provides the best customer service out of all of the competitors in this space. And it used to be just speculation that Shift would start to take market share because of this, but this has turned to factual information. Shift Technologies is taking market share as they expand thanks to their customer satisfaction ratings. I also should note that these ratings are consistent across Yelp as well, so this isn't just a fluke thing on one website. Shift Technologies provides the best customer service. And in an industry like this, buying and selling used cars, basically whoever provides the best experience is going to be the most successful, because all of a sudden the word of mouth starts to spread, which is free advertising, which takes away some of that advertising expense and produces better margins for the company. And keep that in mind because I'll come back to profit margin later in this video. I'm now going to go back to our spreadsheet and scroll down. And this is probably the reason I'm most bullish on Shift out of all these other names. And it's because of their website traffic increase. Keep in mind, all of these competitors conduct their business online. So website traffic is a key metric here. And I basically just combined all this into one spreadsheet so we didn't have to keep flipping between website pages to see how website traffic has increased for each respective company. But we can see Carvana's website traffic over the past 6 months has increased 3%, Vroom's has increased 1.2%, Shift's has increased 20%, and CarLotz has increased 7%. Now, this is pretty easy to tell. I mean, you want the most website traffic in this space. You want your website traffic to be growing the fastest out of anybody in this space. And again, Shift Technologies takes the cake here. And this could be tied back to that customer satisfaction thing, but it also could be tied back to several other factors like their advertising expense, like their marketing. But in general, I think most of it probably has to do with that free word of mouth advertising, where people are saying, hey, I just sold my car through Shift. It was a great experience. If you're looking to sell your car right now, use Shift. For years in the past, Carvana was the only option, which is why they have such a big market share. But as this market and industry has developed, obviously it's created room for more competitors to enter. And so far, Shift Technologies is kicking butt on all fronts that they need to in order to steal market share and maybe eventually become the biggest player in this space. Now, because of reasons I've already mentioned, CarLotz being the smallest in this space and Vroom having terrible customer service, I'm just going to focus on Shift Technologies and Carvana throughout the rest of this video because I think they're going to be the main competitors in this industry going forward. So, why do I like Shift Technologies more than Carvana right now? We've already covered the valuation. Obviously, the valuation makes for a better investment in Shift right now. We've already talked about the customer satisfaction and service ratings. Shift takes the cake there. And also the website traffic increase over the past 6 months. Shift owns that. So those are 3 big reasons right there why I love Shift Technologies over Carvana. But there's also more. We know that Carvana is the most mature out of any of these companies, which also means it probably has less growth in front of it compared to a company like Shift Technologies. For example, Shift Technologies is only in about 8 regions right now, whereas Carvana is in 30 plus regions across the United States of America. So there's quite an opportunity here for just natural expansion for Shift Technologies. And if they keep their customer service and satisfaction ratings higher, they're going to steal that market share. We also know as Shift naturally expands to additional regions, hedge funds are going to have to take another look. As Shift becomes more competitive with Carvana in different regions, big money hedge funds, they're going to be asking themselves, why are we paying multiple times sales of next year when we could be paying 40% of sales next year for an equal competitor that's probably going to bring the same cash flows and profitability over time? So this in particular, I think, is a maturity issue where as Shift Technologies matures over time, the hedge funds are going to have to start taking another look. Right now, Shift is still small enough where that doesn't necessarily have to happen. Shift just needs to continue to expand like they have, And eventually, the money is going to find them because it has no other option. There's also one other thing that really makes me like Shift better than Carvana, and it simply has to do with the fact that Carvana insiders have sold 23, almost 24 million shares over the past 12 months. In comparison, Shift Technologies, their insiders have sold 3.3 million shares over the past 12 months. Now, this is natural. This selling that's taken place in Shift Technologies is natural because they're a new public company. This happens. Insiders cash out of some of their investment because they built the company up high enough that they're now publicly listed and they can take some of their investment out to deploy other places or even just reward themselves. In Carvana's case, these 24 million shares that have been sold over the past 12 months, there's simply no excuse here because Carvana's been a public company for about 4.5 years now. This selling that's taking place is simply just insiders selling out for really no reason. This brings me to believe that, the insiders aren't so confident that their stock price is going to keep going up. Maybe they're not as confident in their business model as they used to be. But when I see that in May, Shift Technologies insiders went out and bought shares directly on the open market, 10,000 shares apiece, that makes me even more confident in my investment because I know that the management team also sees that they are vastly undervalued. I also think that Shift's insiders are probably going to buy on the open market yet again. If the share price stays this low, we're getting close to that $5 range, which is just crazy to think about. But last time they bought on the open market, it was around $7 a share. So they can get a pretty good discount here if they want to scoop up more shares, and I'm sure they will if the share price stays depressed. So as you look at the way Carvana's competitors are valued in comparison to them, you may be wondering if there's something wrong with the industry here, or there's something wrong with these companies in particular. Now, I've already covered, I think it's a bit of a maturity issue for the industry where over time as the industry matures, this will fix itself. These other competitors will start to take market share. They will be respected on Wall Street more. But there's also something else. Up until recently, there was kind of a big cloud in the stock market in relation to this online industry where we really didn't know if a business model like this could become profitable. Now, the reason I say up until recently is because Carvana last quarter just proved that it is possible and it is probable that this will be a profitable business model going forward as the market expands and grows. Carvana just reported its first profitable quarter in its history, and I think moving forward, you're going to see more and more consistency in this. Obviously, due to the pandemic, used car prices have ballooned, which has helped each of these companies out tremendously when it comes to gross margin. But even if this was just a temporary thing, I think moving forward, just the fact they proved that they can be profitable is a big thing for this industry. And I think, again, that it's going to be more consistent as we move forward. So outside of the prices of used cars, what can be done to improve gross margin? Well, something that both Carvana and Shift have done is they've introduced a financing side to their business model, and they've also introduced protection plans. And both of those things, if they can get customers to sign up for their financing and their protection plans, boost that gross margin per vehicle. However, what I think is most important here in this industry is sheer volume. No matter how low your margin is per unit, if you're moving more and more units, you're going to be more and more profitable on paper. You're bringing in more and more profits because you're moving more and more units. I think that's the biggest thing for this industry. And again, it's a maturity issue. As the industry matures, as more used car sales end up being online, volume is going to go up for all of these companies. It's just a matter of who executes the best and who can take advantage of the opportunity. And for several reasons that I've already laid out in today's video, I believe Shift Technologies is the best positioned out of anybody to take advantage of this. So at this point in the video, you may be wondering, okay, Rex, it's all talk. What are you doing? Well, due to the fact that last earnings call, the management team basically said they're gearing up for a boom of a 2022. They're going to have a big push at the beginning of 2022, meaning they're hiring ahead of time instead of just in time due to the labor issues. I have decided to purchase call options. I don't generally post my plays here publicly on YouTube, but I'll put it up for the sake of this. I also have purchased shares in several of my different portfolios. I'm a firm believer that even just a year from now, Shift Technologies is going to be much more fairly valued, and it's only a matter of time until that happens. Even if it is over a year, I think it's going to be sometime in the short term, which is why I've chosen to play call options. I generally don't play call options unless I just have extra gamble money I'm willing to lose, or if I'm extra confident. In this case, I'm just extra confident in my investment that eventually Shift Technologies will be fairly valued. According to Carvana's valuation, Shift Technologies should be and probably will be a $40 stock sometime in the not too distant future. But ultimately, who really cares how long it takes? That is tremendous investment return. Now, again, if you're comfortable sharing, let me know down in the comment section below what your exposure to Shift Technologies stock is, how many shares you own, if you own any call options, anything like that. Let me know if you're comfortable sharing. If you enjoyed this video, hit that like button down below. If you want to get more people invested in this company, or at least looking into the company, feel free to share this video with your friends or your family or your colleagues. And with that, have a great rest of your day. I'll be back with a brand new video next week. Peace out.